Hello, good morning to all. Welcome to today's daily dose of market insights by OANDA, presented by myself, Kelvin Wong, the senior market analyst of OANDA Asia Pacific. So, very good morning to all. Today is Tuesday, 19th of September. So, before we start our daily dose, let's take a look at the disclaimer slides first. All right, so leverage trading is risky. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product. All right, so now, before we start our daily dose, let's take a look at the usual key takeaways from this daily session will be events and news flow that took shape yesterday, and as well as what are the key data releases that occurred yesterday as well and earlier this morning Asia session. And to round out, we'll be sharing a short-term technical analysis outlook on the various asset classes that I'd like to share with you all in a while time. Okay, so now let us start with the what happened a while ago or what happened overnight, some key interesting news flow. So with that, let me share with you my full screen instead. So let me currently hide myself first. Okay, so let us focus more on the screen I share with you. All right, so over here, what we could see over here is number one, the US session actually ended rather mixed. Okay, so what we could see at this point in time here, the US session at the end of the US trading session yesterday, what we could see is a rather mixed section, especially on the mega cap stocks. Okay, so I could see over here is that yes, Apple actually did pretty well, up 1.7%. Yesterday, by the yesterday close, US session close, but the rest of the mega cap stocks like Microsoft is only negative 0.35%. Nvidia almost unchanged at positive 0.15%, and Tesla actually lost in the rate at negative 3.32%. Then pretty much lackluster for Google at positive 0.48%, and Amazon at negative 0.29%. So all in all, right, what you could see is a rather mixed session in the US stock indices yesterday. Not all we call it a very clear directional bias in terms of bearish or bullish for the intraday session. So that is pretty much I would say that normal. Why? Because do not forget, for this week there's a key major event in the US market as well as the global market, will be the Federal Reserve meeting that is due on Wednesday US time, that is Singapore time on Thursday 2 a.m. So I'll share more about the Federal Reserve, the Fed FOMC, what are the things to look out for in my daily dose for tomorrow. But all in all, right, what you could see over here is that in the US session, the SPX 500 actually almost unchanged at 0.07%. The Nasdaq 100 is the one that is top performing at 0.15%, but that is actually due to Apple because of that positive performance of 1.69%. All right, and the one that is the Dow Jones also almost unchanged, 0.02%. The Russell is still the worst performance at negative 0.69%. So as you know, what you could see on the intraday basis in the benchmark US indices, it seems to me that there is still more bearish elements exhibiting. So one thing I want to share with you all is we could actually look at some key sectors while we actually trade the US benchmark indices, because certain key sectors also impact the benchmark US indices as well. So one of the key sector I'm looking at will be the S&P Bank ETF, KBE. So you all know that the banking sector in US is pretty much important. Why? Because if you could still recall, earlier March this year, there was this regional banking crisis or liquidity crisis that also caused a significant a sold off in the benchmark US indices on the at least in a very short term basis. So what we could see over here is that this S&P Bank ETF, the KBE, the technicals doesn't look great, all right, because look at yesterday price action. Yesterday actually it closed down -2%, so that actually underperformed the benchmark's US stock indices, and now it's testing a key intermediate support at 37.75. So if this support level break, it could potentially go down much lower towards the low of May, towards this area here, which is the low of June and May. So that could actually seems to me that market participants are not so optimistic about the performance of US banks, this KBE, based on the technicals, right ahead of the Federal Reserve. So do they know something about what's going to happen? But I do not know. But from the price action and the sentiment, it do indicates that things are not so rosy for the US banks. So that could actually potentially add some downside pressure on the benchmark US indices. All right. So this is one of the key highlights I share with you all on the US market. Now moving on, one of the other highlights overnight over here, that this news report as well, reported by Financial Times. So as you all know that US banks, US corporation, pardon me, US corporation, they tend to actually advocate a lot of share buyback to actually boost their share prices legally, not illegal, legally, because they are surplus cash. So instead of give out dividend, some of the company, especially those growth related company or one of the mega cap stocks like Apple, they tend to actually buy back shares actually. So that actually give me a bit of liquidity on the US stock market to actually support the share prices to potentially for them to inch higher in the US stock market. But based on this latest data release from compiled by S&P Dow Jones Indices, if you look at the quarterly share repurchase program on aggregate by the S&P 500 company, inside the S&P 500 company, has starts to actually temper off in the last quarter itself. That means in Q2 itself, it starts to temper off from a peak that was seen in later part of 2022. So since after 2022, the number of aggregate share repurchase program has starts to temper off. So if this thing starts to actually temper off in Q3 and Q4 this year, that means i.e. right, there is potentially we call it less ammunition for the boost to actually shape higher high on the major benchmark US indices. So that's for more of the medium term to longer term basis. And one of the reasons why, because of higher rates. All right. So if that's why this coming Thursday is pretty much key. So especially for the dot plot and the press conference. What is dot plot? Don't worry, I'll share with you all tomorrow. What is the dot plot? So dot plot and press conference by Powell is pretty much important because that will actually imply how long will the Fed or will he give any what we call it guidance for the Fed to actually maintain interest rate for a higher level for a longer period. So even though we know that potentially there will be only one more chance of a rate hike this year before 2023 ends. All right. Then now moving on to Asia session, what are the key events that take shape early on today? Is let me share with you all on the calendar. So just a while ago, RBA actually releases in minutes, the RBA meeting minutes. So this minutes, right, is pretty much unchanged. So what you will see over here is almost pricing by the market already. So yes, they potentially may discuss rising rate again in September, but they could actually opt to pause as well. Why? Because the outlook for Chinese economy is getting more uncertain. So there's a bit of what I call demand, negative demand shock that may actually creep back into Australian economy. So I would say that there is actually potentially a chance for them to actually pause again in September. So if you look at the pricing of the futures market, so bear in mind that how do I see whether the market is expecting a pause or high? I can look at the futures pricing by this RBA rate tracker that is being compiled, that you can actually type in RBA rate tracker. So it's part of this ASX website, the Australia Exchange website. So they actually have this a rate tracker. So what they do is that they actually look at the 30-day interbank cash rate target. So that is actually the futures interest rate on the RBA cash policy rate. So if you look at the current expectation right now, based on 18th of September, what it actually imply right now is that there actually is a 9% chance of actually a rate cut instead. So if you look at the last few weeks, all in all, so this is based on 18th of September. That means yesterday's data. So this is not updated live. So you got to actually look at the end of Australia business day. So perhaps by around 4 p.m. Singapore time, you're able to see what is the latest data as of today. So based on yesterday data, there's only a 9% chance over here, a 9% chance of an interest rate decrease to 3.85 for the next RBA board meeting. All right, so there is no indication of a hike. Yeah. So right now, based on the market expecting on the latest RBA stances, it's very likely they'll be staying put or at least a small chance of a hike. Okay, so this is what the market actually imply over here. So that actually what we call see over here is that potentially for the Aussie dollar to go up much higher. We're talking about going up, like for example, what 400 or 500 pips are in the next medium term to long term. We're talking about multi-week to multi-month on a substantial uptrend seems to be pretty slim. Why? Because there is a lesser expectation chance of a rate increase. All right, so this is what it implies from the based on the current futures market pricing on the RBA interest rate policy. Okay, now with that, let's take a look of the calendar, what to look out for in today's session throughout the day, from European to from European session all the way onwards to the US session. So today we have the finalized or the final data of the core inflation rate up from Eurozone. So so something to look out for. And also up at 8:30 p.m. we have the Canada inflation rate, Singapore time. And for the US session, we have the housing stats data coming at 8:30 p.m. So that's pretty much sum up for the key economic data to look out for in today's session. All right. So now with that, let's just jump on to the technical analysis outlook that I'll share with you on the various asset classes. So now I'll start with the US FX market first. Okay, pardon me, the FX market first. All right. So over at the FX market over here, so we could actually see right now the FX pair based on the current 1 month rolling performance as of now, Asia session 19th of September. Okay, so what I could see is that the alligator mouth or the K-shaped performance still persists. That means dollar still strengthening against the European currency, especially against the sterling, followed by the euro and the Swiss. Dollar yen seems to be inching up slightly, but not so much against the Sing dollar, the Kiwi dollar, the CNH, the Chinese yuan, the Aussie, and as well as the dollar CAD. So it actually underperformed the dollar CAD. Why? So that I'll share with you, because dollar CAD has a close proxy. The Canada dollar has a close proxy with the oil prices. So right now, since the start of the month, oil prices has been going up much higher, but we start to see dollar underperformance against the Canada dollar. That means we're talking about the dollar strength starts to temper off against the Canada dollar due to a strong performance in oil prices that we see since the start of this month. So that actually sucking a bit of dollar strength of the Canada dollar. Then the CNHY, because market is still pretty much worried about this China bank potential intervention. So if you look at the CNH rate over here, let me very quickly share with the chart of the dollar CNH, that means the offshore yen. So you could see the offshore yen here is trading pretty much sideways, very tight, between 7.3165 and the 50-day moving average at 7.2330. So if it continues to trade within this range itself, in this range since last Monday, potentially we may see such we call it dollar strength to be much minute in the Aussie dollar, the Kiwi dollar, and as well as the Sing dollar, due to the fact that all these three currency, the Sing dollar, the Aussie dollar, and the Kiwi dollar, do have a very close proxy with the Chinese yuan. Okay, now let me share with you the technical outlook on the euro dollar as well as the sterling dollar. Start with the euro dollar first. So on the 1 hour chart of the euro dollar, that means euro versus USD, still recall that yesterday we have a short-term pivotal resistance to maintain that short-term bearish bias, 1.0707, still pretty much the same, remains intact. Yesterday price action to attempted to test close to it, but didn't actually manage to shape higher high and starts to taper off. So for sure, this 1.0707 is a key level to watch to maintain that bearish bias, short-term bearish bias on the euro dollar. So 1.0707 key short-term pivotal resistance, no change for today. Looking for a short-term bearish bias to retest last Friday's low at 1.0635 level on the euro dollar. So, but however, if we start to see a breakup or a 1 hour clearance close above 1.0707, then this short-term bearish bias will be invalidated to see a squeeze up to test the next resistance at 1.0770, means 0770. All right. So now with that, let's take a look at the sterling dollar. So if you look at the sterling dollar over here, it's still it's the weaker so far. Continue to print lower high. You will see lower high right below the 200-day moving average. So still using the 124.60 as a key short-term pivotal resistance, looking for a further push down to test the next support level at 1.2340. So still maintaining that short-term bearish bias for the sterling dollar. But however, if we start to see a clearance or a 1 hour bullish breakout above 1.2460, then this short-term bearish bias will be invalidated to see a squeeze up to test this medium-term descending channel resistance that is in place since 14th of July high, now acting as a resistance at 1.2550. All right, so still maintaining that short-term bearish bias on the sterling dollar. So last one on the FX pair is I want to share with you all will be the dollar CAD. Still remember that why dollar CAD is actually going downwards since the start of this month because of the strength in the oil prices. So if you look at dollar CAD itself, on the 1 hour chart, is still going to trade down below this trade within this descending channel, minor descending channel in place since 8th of September high, indicating to us that we are still in the oscillation mode between the dollar CAD is still oscillating within a minor bearish trend, and also holding below this blue line here, which is the 20-day moving average. Okay, still bear in mind that in TradingView we are able to overlay a longer time frame element, technical element like a 20-day moving average, overlay it on a hourly chart. All right, so this give us a much more clearer picture as well. Okay, in terms of the trend condition. So for sure, the short-term trend is still pointing downwards. So what I do over here is that for today, to maintain that bearish bias on the dollar CAD, I'll be using 135.20 as my key short-term pivotal resistance level. What's 135.20 is the former minor support level broken down turns into a minor pullback resistance, also close to the descending channel of this upper boundary of this minor descending channel. So as long as 135.20 key short-term pivotal resistance holds, potentially this dollar CAD could actually test the next support level at 134.45, which is so co-influence with the lower boundary of this descending channel, and as well as this congestion zone over here. All right, RSI still bearish, no signs of bullish divergence at the oversold level, continue to trade within this parallel descending resistance level. Okay, so as long as 125.20 holds, still looking for a further push down, potential push down on the dollar CAD. However, if the dollar CAD start to surpass above 135.20, then this short-term bearish bias will be invalidated to see a squeeze up to retest the 200-day moving average, acting as a resistance now at 135.70, which is so confluence with this former swing low now turns into a pullback resistance at 135.70 as well. Okay, so that's pretty much sum up on the FX story. So now let's move on to the indices. So for the indices, let's start from the Asia indices first. So for the Asia indices, still recall the Hong Kong 33 or the Hang Seng Index. Yesterday we have a neutral bias between 1837 and 17,790. Price action at the start of this morning tested at close to 17,790 and start to bounce up. And the way price action actually react over here, if you look at it, it start to shape lower low upon testing the 17,790 level. But however, if you look at the RSI on the hourly, RSI start to shape higher low right at, or sloping upwards, we call it, right at the oversold region. So indicate to us that this morning push down in price action, the downside momentum is more or less abated, at least in the short term. So with this positive sign in the short term, again, I want to stress the hourly chart. So I'll be flipping to a bullish bias, at least in the short term, holding above 17,790 key short-term pivotal support to look for a potential push-up at least to retest 18,160, maximum 18,370, which was the swing high on last Friday. So flipping to a short-term bullish bias to play a push-up towards this minor congestion resistance zone over here. So does it tell me that Hang Seng itself will start to shape a much more substantial bullish trend? Right now, the technical picture is unsure unless we are able to clear above 18,370. But at least in the short term, we know that yesterday's push down, the bearish momentum has been negated by the appearance of this bullish divergence that is seen on the hourly RSI. But however, if we start to see an hourly close or breakdown below 17,790, then this short-term potential push-up will be invalidated to see a further, we call it decline, to retest the 21st of August swing low at support area at 17,570 slash 17,370, which is the previous low of this congestion zone over here of 23rd of November last year. Okay, so that's for the Hong Kong 33 index. Now flipping on to the German 30 next. Okay, so over at the German 30 over here is that still recall yesterday we have the bearish bias looking for a push down to test that support level at 15,700. So support level has already been met. So the no clear signs of the RSI shaping a bullish divergence. Why? Because if you look at it, price action going to go down lower, RSI also going to go down lower as well over here. Okay, so no bullish divergence. So what we could see over here is that the momentum still seems to be remains weak or bearish on the German 30 index. So with that, right, what I could do over here is potentially, since the price action already came down quite a fair bit, I will actually use 15,870 now as my key short-term pivotal resistance level. Potentially now it may see a bit of bounce towards 15,780, maximum 15,870 level. So this level also close to this former congestion zone over here. Previously support, resistance break, turns into support breakdown, now potentially turns into a pullback resistance. And if you do the Fibo retracement, is actually close to the 61.8 Fibo retracement, the golden ratio. So all in all, I'll be using a Titan key 15,080.70 as my key short-term pivotal resistance. For a, yes, it may see a potential bounce, but as long as this minor bounce didn't surpass 15,870, the next potential move, it could be still on the downside rather than shaping a more substantial corrective rebound, hitting up higher. So as long as 15,870 holds, the owners is still potentially on the bearish side of the story for it to retest the 13th of September and 14th of September swing low area at 15,570. So still maintaining that short-term bearish bias on the German 30 index with a tightened key short-term pivotal resistance at 15,870. However, if we start to see a clearance above 15,870, then we may start to see a further squeeze up to retest the 15th of September swing high and 31st of August swing high resistance area at 15,990 slash 16,045. Okay, now without further ado, let's go to the US stock indices. So for the US stock indices, yesterday the price actions attempt to actually push down and did a push up, but throughout the close of the US session, they actually try to inch down much lower. This is the Dow Jones Industrial Average, which is the US Wall Street 30, we call it in our platform. So with that, right, I will actually use a much more tighter key short-term pivotal resistance for the Dow Jones Industrial or the Wall Street 30 at 34,900, which is also the 50-day moving average. And also, if you do the Fibo retracement, taking from the last swing high to the swing low on last Friday, is so close to 61.8%. All right, so with 34,900 key short-term pivotal resistance level, as long as this level is not surpassed, potentially the US Wall Street 30 could actually retest the intermediate support at 34,520. A break below it may take us lower to test that 7 September minor swing low area at 34,335. However, if we start to see a breakup above 34,900, then potentially we could see a much further squeeze up, a very choppy move to retest the 31st of August and 15th of September range resistance at 35,050 on the US Wall Street 30. Okay, now moving on, last one will be the Nasdaq 100. So for the Nasdaq 100, still pretty much unchanged. So the Nasdaq 100 yesterday movement was not as bearish as, okay, sorry, this is the daily chart. Let's go to the hourly chart. So yesterday movement itself, same thing. It actually managed to bounce higher, but after the bounce higher in the mid of the US session, it didn't actually manage to surpass the 20-day moving average before it started to trend slightly lower. So with that, I do not want to tighten my key short-term pivotal support to this area here, which is this previous congestion area that was just tested a couple of times. Support break on Friday now turns into a pullback resistance. So I don't want to tie it so tightly at 15,360, given the fact that Nasdaq 100 is much more volatile on the wild side of the story, on the side of the story. So I will actually still maintain that 15,540, which was last Friday's swing high before that off took shape. So that will be my key short-term pivotal resistance to maintain that short-term bearish bias for Nasdaq 100 to test the next support level at 15,085. A break below it potentially could see us much lower towards the 25th of August swing low area at 14,750. All right. So, but however, if we start to see a breakup or clearance above 15,540, then this short-term bearish bias will be invalidated to see a squeeze up towards the next resistance level, which is the swing high area of 29 of July and 1st of August, acting as a resistance at 15,800 level. So now commodities, WTI crude oil. So this is West Texas oil. So still unchanged. Yesterday we have a bullish bias above 89.30 key short-term pivotal support level. So still no change as long as this level holds. Potentially a WTI West Texas oil Bitcoin platform could see much to inch higher towards the next resistance level at 93.80. But however, a breakdown or hourly close, a breakdown with an hourly close below 89.30, then we may start to see a much more a substantial multi-day corrective pullback within a medium-term uptrend towards the 20-day moving average, acting as a support at 84.90. So still maintaining that short-term bullish bias on the West Texas oil. All right. Now, what's next for gold? So if you look at gold over here, okay, let me share the gold chart. Where's the gold chart? All right. Okay, so for spot gold, XAU slash USD. So for spot gold now, wow. Okay, so right now in the Asia session, it now managed to actually surpass the 50-day moving average, and yeah, the 50-day moving average. Okay, so with that in mind, over here is that I will actually tighten the key short-term pivotal support level from 1913 we have yesterday all the way towards the close to the 200-day moving average now at 1922 level. Okay, 1922. So with a tightened key short-term pivotal support level at 1922, we are still maintaining that bullish bias for it to hit, potentially test the swing high area of 30th of August and 31st of August at 1948 level. So however, if we start to see a breakdown of this 1922, then potentially we could see another wild whipsaw movement again. That means we consider as a failure breakout above the 50-day moving average. So with that, the gold price, the XAU slash USD may see a choppy down move towards the support level, which is the 1915, 1913 support level. Okay, the next intermediate support level for spot gold. All right, so still maintaining that bullish bias on spot gold with a tightened key short-term pivotal support for today at 1922. Given price has already moved up a fair bit during today's Asia session. All right, so with that, I've covered much ground for today's daily dose of market insights. We come to the 30th minute mark. So with that, do have a great day ahead, and I shall speak with you all again tomorrow. Thank you.